Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. This time it's Thursday. It's the last day of February. We are about to turn to March, and a little bit more of the same today. Slow drift to the downside from a broad perspective. And good afternoon, Tanner. Great to see you, my friend. Great to see you guys. As always, it's my pleasure, and I always appreciate hanging around with me, going through the daily routine. One of those days, again, individual stocks are moving. Broadly speaking, we're seeing that slow drift to the downside in the overall market, but not a whole lot. I mean, we're 0.27, 0.35 down today on our different indexes. So still kind of deciding what we want to do, turning into kind of a little slow potential pullback, maybe. I guess we will have to see. And good afternoon to you as well, Patricia. Always nice to see you, and I hope you are all doing well. On the earnings front, not a huge slate. Tomorrow morning before the open, we do have Foot Locker and X-Ray as far as S&P 500 companies go. Tonight you have an Autodesk reporting, you have a Nordstrom's reporting, a couple others. Interesting one is Gap, GPS. They actually announced that they are going to split into two separate companies, spinning off Old Navy as its own publicly traded company or stock. So that news really sent them up in the early response to it, at least in the after hours trading, up somewhere between, depending on when I looked at it, 15 and 20%. So it looks like, I don't know what their earnings report was, but seems like traders were really excited about the spinoff. I don't know. We'll have to see where that one takes us tomorrow, but always interesting when you see things spin off like that. So we'll talk a little bit more about that maybe tomorrow when we kind of see how the market kind of shakes out with the earnings and that news. It seemed like maybe too much excitement for me in the short term. Really quick before we move on, we talked yesterday about the healthcare plans and how we're seeing a little bit of divergence kind of develop in the healthcare sector as a whole. And I just thought I would, bring up the S&P 500 companies that are, in that industry. You've got Humana, who just a couple of days ago was in my bullish watch list, watching for trying to break that 200-day moving average. See you later. We have CVS that gapped down on earnings a week and a half ago or so, breaking a long-term level of support, just kind of in an absolute free fall right now. CNC taking out a swing level of support. Anthem, that had been tremendously strong, had a really solid earnings report, at least in my mind, working all the way back to a swing low. Another huge, relatively speaking, downward move on UNH, kind of the big one, the Dow component. You have Cigna breaking a support level. So these healthcare stocks are real, or healthcare plan stocks, let me rephrase that. And good afternoon to you, Marie. Great to see you. They're, at least to my eyes, looking pretty rough. And so, as we kind of think about the healthcare sector in the days to come, I think we're going to want to kind of keep that in mind. I think, what you're kind of seeing is some really interesting bullish charts and then some really ugly, potentially bearish charts within the sector as a whole. And until this kind of dies down, I think we should probably think about it like that. I think it's fine to be bullish in that healthcare sector. We'll talk a little bit more about that. But when we're thinking about the ETF, maybe as our primary vehicle, that would be a little bit of a concern to me. As long as these, healthcare plans are selling like this, they're putting a tremendous amount of pressure on that ETF. We're still holding support, as we'll see, but we'll get into that. I just thought that was worth taking a quick peek at. As far as the market goes, here we are in a 15-minute time frame on the S&P 500. Another little gap down to start the day. A lot of back and forth, a little bit of a rally, slow drift to the downside, kind of a fairly good-sized candle the last 15 minutes of the trading day. Really, again, just kind of continuing what we have been seeing over the last couple of days. It's not breaking that resistance. At least it's going to be a fight. And we're just slowly drifting to the downside. And it's actually turning into a little moderate pullback. Now, I still think from a pullback point of view, broadly speaking, we're too close to resistance for me to want to ever trade a pullback that looked like that. But who knows? Maybe we pull back for a few more days. It is opening up the door for some interesting, retracement candidates perhaps for next week. We'll have to wait and see how that goes. but another day just slow drift. We're, not a lot of conviction from the bears. We're seeing that day in and day out, but nobody's really jumping out of their seats to buy either, right? As we are kind of still holding above that short-term 9 exponential moving average, which is of course a short-term momentum type of an average. And hey, as long as we're above that, how bearish can we be, right? So just another slow drift to the downside at that resistance. A deeper pullback maybe would be interesting. As it stands right now, I think you are really waiting for the break. We're still very, very close. We could test that any given day, at least in theory, right? Over in the NASDAQ, more of the same. Almost the exact same situation. And, this is what happens when all of our indexes are at resistance at the same time, right? Where somebody's going to have to take charge, whether it's to break through resistance first or to actually start generating more than any intraday, sell signals to get, people really starting to sell into this thing. We're continuing to hold above our averages. We're continuing to hold right below resistance. So again, just one of those, it's just turned out to be one of those weeks, right? We got to resistance on Monday and basically been drifting ever since. So it was all over from an excitement point of view. Same deal on the Dow. A little bit more, a little bit of a redder candle today, but still closing above a rising 9 EMA, still higher highs and higher lows. So again, once again, it really is just more of the same, at least as far as I'm concerned. No real reason to believe tomorrow's the day that buyers are going to step back in, but no real reason in my mind to think that tomorrow's the day that the bottom falls out and everybody starts taking profits. I guess we'll have to see how that one goes. I would imagine a little more of the same. That's usually what I expect out of tomorrow, no matter what's going on. So more of the same. Over in the rut, kind of putting in a little bit of a sideways action over the last 2 trading candles, hanging around on top of that 9 EMA. Of course, we know that 16 was a pretty respectable level of resistance. And certainly now we do, right? We've seen some pretty decent movement to the downside off of that test of 1600, really has remained unchanged. That continues, I think, to be our primary resistance level. I still think we are in a spot where it's fine to be looking at bearish trades. I won't say I'm bearish on the market because I still don't feel we see any signals generated, from a broad perspective. I still am looking more so than not towards it, trying at least another run at that resistance personally, but that won't keep me away from, trading bearish on individual components that are looking pretty bearish. Kraft Heinz, looking at you, you just continue to sell. Those healthcare plans are starting to look interesting too. Maybe have to wait for a little bit of a retracement though, or a consolidation for my tastes. So, not a lot to see here in the broad market. Really just broadly, it was kind of a dull day. And we did see some excitement over in our materials sector as we kind of, much like the market started selling, but unlike kind of the rest of the market that just kind of wanted to go back and forth throughout much of the day, we really just kind of sold, all day. And I'm okay with that. We've been keeping an eye on that resistance level, and I've not been shy in saying that, I'm going to like a break of that resistance as a bullish signal. And that is unchanged, in my opinion, based off of today's price action. But now all of a sudden, I'm starting to have hope that maybe some pullbacks might line up for next week. I'm going to be very mindful of 56, but if we are to pull back into this old resistance at 55, which is going to line up with that 20-period moving average or thereabouts, might be an interesting bullish retracement area for me, at least going into next week. That can't happen tomorrow. Big red candle today, closing below the 9 EMA, which is kind of flipping over. Again, that's just a short-term moving average, but it is something going to need at least a day, right? Which is great. Maybe tomorrow is this big green candle, and well, see ya. We'll still wait for the breakout. But maybe tomorrow we have a smaller candle or a doji or whatever we might get from that perspective. And I imagine I'll have some, if that's the case, have some retracement candidates in my watch list going into next week. And Casey, basically, welcome. Great to see you. Great to see you too, Andy. Basically, wasn't enough, right? And I guess when it comes to news, I always just assume that no one cares. I know that I'm in the minority there, at least from a swing trading perspective. I should say that. I care a lot, big picture, but, usually I get my swing trader hat on for the most part personally. And if it would have pushed through, then we would have been talking about the rally, right? So was it, the early leaving in the North Korea talks? Was it just because no one was willing to buy first? I guess we'll never know. But whatever it is, you're right. We did not get the GDP rally today on, okay, I don't think it was, woohoo, set the world on fire news, but certainly not bad by any means. in my mind. Again, we're kind of in pullback. And if you think about if the whole market is a bunch of me's or a bunch of you's, somebody has to be first, right? Somebody has to be first. The problem is that the whole market, I know the whole market's not a bunch of me's, and that's probably a good thing, but someone has to be first. And and no one wants to be first right now, right? It really feels to me like people want to buy. We're really holding up nicely on a pullback here, very slow, broadly speaking, pullback. To me, that kind of makes me feel like people believe that it's going to rally back up. Just no one wants to be first. And I don't blame them. I'm not going first. Somebody else is going first. So, yeah, exactly, Casey. Exactly. So, interesting development. I'm really excited about this. I mean, definitely a big downward day. I don't think tomorrow is the day where you can blindly buy into the sector. Quite a bit of selling over there for couldn't come up with a good reason, not that I'm really, look all that hard, that let the price do the talking, but a very bearish candle. So maybe this is going to develop into a pullback, but we are going to need to slow down a little bit for a candle or two before I think we can confidently say that some retracement opportunities might be up our alley, at least up my alley. I'm a win. So some selling over in energy too. We actually worked down into that old trading range today on the intraday. We did come off of it as that's kind of lined up with our 20-day moving average. Did kind of rally up off of those lows. Very, very undecided. Energy's having a hard time. And again, we could speculate all we want, but the reality is it continues to hold that old breakout, that old resistance and support as new support. Just not a lot of behind it for one reason or the other. Now, I don't think that this is a sell signal personally. And certainly as long as we're holding above this breakout, this old support level, I can't even understand how you could want to be bearish. That doesn't mean you can't be. That just means I wouldn't get where your head was at. A break below that, I won't be bearish. I'll be looking for a deeper retracement, but I would at least understand the bearish argument. There's a lot of history, as we've talked about and watched together, at that 65 marker. And so that failing, if you just think about an easy hypothetical trade, we're buying it at 65.50 and putting a stop loss at 64.75. Right, just betting on that breakout hold. And that may be a little oversimplifying it a little bit, but fundamentally that is what we would be doing, right? If whether we bought back here, or even potentially bought off of the intraday, really the thought process, at least in my head, would be we're betting that this holds. And if it holds, we've got a lot more to gain than we have to lose. But I can only speak for myself. I wouldn't put my stop loss way down here. But I do think as the chart currently stands, that would be the true bearish signal, a break of 62. Now we'll see. This continues to hold no matter what kind of day we get, right? We've seen 65 or approximately 65, probably better say it that way, hold day in, day out, day in, day out. No reason to think that's not going to happen tomorrow. But if that does, probably should expect a little bit more of a pullback, because I would assume that some traders are going to have some stop losses right below that old breakout channel. I don't think that's a bearish place, but I would completely understand not being bullish if we do close below that old 65 level. But we're holding it here again today, but another day of selling. We really saw some selling in the material sector and the energy sector today, far more than when you look at the overall market, you would think that you would see, right? You see the market basically down 0.25%. You don't expect really any sector to be down over 1%, but we had a couple that were in that ballpark. Over in financials, just kind of hanging around very much like the overall market, hanging out right below some resistance. Whether we thought the 200 was going to be a major level of resistance or not, we now have that swing high that put us up right there, which is kind of lining up about with where we are in the overall market. So really not a lot here has changed from where we were yesterday. Probably looking at a break as a good confirmation, a break of that 200, a break of that swing from back here. As the signal that it wants to run to the upside. I still feel like we're overall bullish on this. We're still holding our moving averages, still moving up in the short-term moving averages, obviously, still building higher highs and higher lows. But, we are struggling much like the overall market. Kind of seems like we know where resistance is, at least on the ETF. I feel pretty comfortable saying that, yeah, that's probably what I should be looking at as resistance. Even though when we first kind of broke here, I really wasn't. I was looking, I'm always going to respect, a 200-day moving average. But as you guys know, it was flat. I'm going to watch it, but I'm not thinking it's going to be a big deal. I think we can now say that it's resistance. At least that's how I'm going about it, at least for the time being. another day, another in the industrial sector. Boeing pushed 440. I think it hit 441 and change here today. As a whole, though, the sector is just kind of hanging around. Again, just like the market at resistance. I know I sound like a broken record all week, but it's the market that we're in. If I could make it break or have a nice pullback, I would. But that's the market that we find ourselves in right now, still hanging around at that 77 resistance. Not much of a pullback here. I think we're probably, I'm probably looking it needs to break for the signal if we don't get a little bit of a deeper pullback. We may, I'm not going to hold my breath, but we can hope, I guess, as we continue to battle at that $77 marker there in the industrial sector. Tech almost exactly like the NASDAQ, hanging out right below resistance, behaving just like the NASDAQ is, just slowly drifting to the downside, still holding, above its moving averages and all of that fun stuff. So again, we've seen some pretty nice moves in tech lately, and I do like this area on a break. I like a lot of areas, but I really like tech because it feels to me there's room for those things to run, maybe compared to some of the other sectors. But we're gonna have to wait until we actually get that break. As we look, if we do get a deeper pullback in the market, though, I do think we can, realistically look at that $69.50 to $70 range as a potential turnaround point. I just don't really think that we're going to get it, but doesn't mean I'm right. So by any stretch of the imagination. So, I don't know, Captain. I don't know when it's ready. It will end when we make lower highs and lower lows. So at least that's how I'm going to interpret it. When we actually start to break levels of support, as long as we're not breaking support, it's not ending yet, right? So to be quite honest, I didn't think we would be here, the day after Christmas. But I learned a long time ago, what do I know? So it's going to do whatever it wants to do. A failure of support will probably be that first signal, at least for me. But we've not seen it, at least broadly speaking, by any means. Over in the staples, some people, and again, I get it. I wasn't on board, and I'm on the record of that. I get people buying in today. We did see that doji at that 20, saw some upward movement today. But for me, nothing has changed. We are still looking at it needs to be a break. And that is a solid signal, in my opinion. It really is. I can change my tune really quick on this chart, basically any day if it wants to break. A clean close with a little bit of follow through the next trading day, I will really like this sector, but we haven't seen that yet. And until we do, I'm going to assume it's not going to happen. So, but nice movement here today off of that doji. It's been a little bit of a weaker area, relatively speaking. Of course, it's not like it's been weak, but a little bit of bounce back here today is one of our few areas to actually close in the positive, as were utilities, who took another run at 57. We talked about it, the last couple of days. These things that are hot, you want those nice textbook pullbacks. You hope to get those nice textbook pullbacks, and you usually don't get those nice textbook pullbacks, right? We had a bounce back day yesterday and ran right back into that 57 here today. We know how much history is here at 57. We've seen the price action on multiple occasions. A break of 57 is certainly, in my mind, a bullish signal and a tradable bullish signal at that, in my opinion. But you can't buy this at 57. In my head, you can't. I just can't buy it. Where the only way we win is if we basically do what we've never done before. Not the best bet as far as I'm concerned. So keep an eye on 57. We can kind of look at maybe this low that we set in. I don't know if I'm quite ready to say it, but I think we can start to at least think about this as our primary support level, this low from Tuesday, which is what going to put us at 56.45. We've seen some nice price appreciation off of that. I'm watching. I'm very interested. Not maybe for a directional trade, more for some wimpy stuff. Because utilities don't really generally excite me out. This was a pretty nice move. I got to give the utility sector credit. It really very nicely filled up that 55 to 57 for us. So usually it's not really my cup of tea, but I'm not opposed to the utility sector. Now, over in healthcare, we looked at those healthcare plans, and those are just, ugly, right? I might think they're uglier than you, but you probably don't think any of them look like the textbook idea of a bullish setup right now. I would imagine. I can't imagine anybody feeling that way. We're seeing quite a bit of very different worlds. You look at Merck, just breaking out, running still a week after the breakout. You look at Lilly, it's been, on a tear. So you're seeing plenty of very nice looking healthcare stocks performing well, but then you're seeing some things that are not so hot. So I think as we kind of think about this sector going forward, at least for the short term for me, I'm basically, the chart on the ETF is of course going to be my guide, but I'm going to be skewed one way or the other, right? I'm very open still to bullish trades within this sector, but right now, at least, those trades are not going to be in healthcare plans. To me, it feels like they are probably the primary culprit for the weakness in the healthcare sector. And I could be dead wrong, but I guess it doesn't matter because that's how I feel and that's how I'm going to approach it, right? So, for me, I'm going to be really thinking about, keeping away from those healthcare plans from a bullish perspective, very open to, strong, stocks, and because the other areas look fine. You have some winners, you have some losers, but you see a lot of strength. Pfizer even tried to break out today, wasn't able to hold the break, but it tried. Right now, we still hold the support on our ETF. But I mean, how many more days? And again, this may be the end of the selling in the healthcare plans. I don't know. But if we continue to sell on those healthcare plans, how many more days do we have before they take out support? And I think that's a fair question to ask, because if that support breaks, this chart is going to look like a reversal to me, where we, doing fine, create a higher low, work back up, come back down, break support again. That hasn't happened yet, and it may not, but just kind of thinking about what might happen if those healthcare plans continue to sell like they have been, it's going to be hard for everything else to prop everything up. Those are some big companies, right? So, keep an eye on this from an ETF point of view. This support level obviously is important, but I think, at least in my mind, as we're trading within this sector right now, it really is going to be a stock pickers type of sector. I don't think whereas a week ago, I might have felt comfortable with the ETF, to be quite honest with you. Today, I don't think that's the vehicle that I'd want if I'm interested in healthcare. Those healthcare plans selling off like that worry me. So I wouldn't, Casey, simply because of some of the strength that you're seeing. Let's pop into some of the top holdings in that sector just to show you what this thing actually looks like. An individual components, I would be okay with, Casey, but on an ETF level, I wouldn't, because you see something like a Johnson & Johnson trying to break to the upside. You see something like a Pfizer really tried to break out, failed, but poked its head out on the intraday. You see Merck running off of a nice little break of an all-time high here. You've got, ABT, just a nice slow grinder to the upside up after a recent break. I know we had these guys are somebody I was watching for a long time. I know they were in one of our reports a couple of weeks ago. And Lilly, showing a lot of strength. And so when I see this type of strength, I expect that the sector is going to be performing well. But then you go in and you look at those healthcare plans and you look at, some of the other stocks in it. The UNH is kind of the big healthcare plan, of course. Dow component is that. Big, huge break to the downside. A CVS, huge, gap down on earnings, followed by a major break of support. I mean, this is a long-term level of support. So for me, Casey, I think leaving the ETF alone, whichever side of the coin I find myself on, is the way I'm going to be looking at it, to be quite honest with you. I'm very open to bearish. I'm very open to bullish. I'm seeing almost two separate worlds when I look at some of the stocks within this sector. I mean, that's to be expected to a certain extent, probably across the board. But I mean, it's pretty dramatic. You're seeing huge sell-offs, and big red candles and a lot of weakness in the healthcare plans. Whereas you're seeing, who's bearish on Lilly? How can you be bearish on that trend? And things like that. So, yeah, so that will be at least my approach, for better or worse. I generally like the healthcare ETF as a potential vehicle to take advantage of healthcare, to be honest with you. And I think I like these sector spider ETFs, but some of them I like more than others because healthcare can move, right? We all know that. We've seen it make some pretty big moves together in relatively short time periods. But right now, for me, I don't think it can be the vehicle because of how different, either side breaks support, and it's doing you no favors because some of these other companies are propping you up on the other side of it. So an interesting development. I don't know if what it's all going to mean. But I do think it's going to be fun to kind of follow and see how long we can kind of see that divergence in that sector. And eventually someone's going to win, right? Or maybe we will just go back and forth sideways forever. We'll have to wait and see. Over in the discretionary, a little bit more of a pullback here today, putting together a little bit of a hammer candlestick here today, back within these, kind of in this old moving average area. For me, this one is well worth the wait. Pullbacks, I would get it. I don't think anything, at least broadly speaking, is ready for entries tomorrow with the price action that we've seen. Will individual stocks be? Absolutely, I'm sure. But broadly speaking, tomorrow doesn't seem like the type of day I'm going to be jumping into a ton of pullbacks. And certainly not going to be the case in the discretionary sector for me, at least. Break, though, I feel a lot different. I really do like it. Some of these stocks are very strong. I do like a break from a pure, technical point of view. And a little bit of a deeper pullback, maybe we could talk. But honestly, I think this is a breakout for me, or at least a potential breakout of that 112. I think that is a really solid signal. If we get it, it probably will take the market breaking out too. So a breakout in the market, a breakout in the sector with some strong stock. Starbucks has been doing nicely, just an easy example. And Home Depot not necessarily doing the world a favor, not really performing on earnings, but yeah, nobody's perfect, right? For me, I still think this is a break, a little closer to the pullback. So while you may not agree with me, if you are looking at this from a pullback, you have to love the price action that we've seen this week. I think very sensibly work into resistance, understandably so. Profit taking begins, continue to drift to the downside. So from a bullish retracement point of view, even though that's not really where my head is personally, I imagine if that's where your head is, you probably like the price development over the course of the week on that sector. Over in real estate, weird day in real estate. Of course, we had that nice big doji yesterday, right? I was hoping for a mellow day or a little bit, nothing too crazy. Well, that is not what we got. I want to go in on a 15-minute chart just to see the hilarity of this day in the market. So we have this huge jump, in the first part of the trading day, followed by a tremendous amount of profit taking the last part of the trading day. This thing was wild today. I didn't sit and stare at it and watch it, but I kind of wish I would have, because it probably would have been fun to do so, resulting in a really weird candle. If this was a pullback that you wanted, I don't think you love this candle, at least not on this ETF. Yeah, that's crazy. Yeah, that's a wild ride today, Casey. Yeah, exactly. And the hilarious thing is, this is the real estate sector ETF. I mean, real estate is not traditionally, REITs are not traditionally the swing trading instrument of choice. Not to say you can't use them, but you talk to swing traders. I like tech. I like energy. I like materials. And then the ETF. I mean, this isn't historically a particularly fast-moving ETF, but not today. Today it was crazy. I don't think you like the price action though. From if you were looking at this from a pullback point of view, you would have probably liked it a lot more if this tail would have ended about 34.75. I think you have to wonder what it all means, and it may mean nothing. And probably even a better way to put it is, odds are it means nothing. But that was a whole lot of selling the second half of the day, and this thing was looking really good, throughout the day. People were jumping into this guy. I mean, that's at one point in time, this was a beautiful green candle pushing that resistance level, right? I think for at least moving into tomorrow on a pullback point of view, this has you kind of scratching your head a little bit. Yeah, I mean, I don't like the development of that candle. I wouldn't go bearish on this chart by any stretch of the imagination, but I would look at that from a don't touch candle personally, Casey. Whenever something weirds me out, I'm not ashamed to say I don't get it. See you tomorrow. No reason to cost myself anything because I'm desperate to look smart or convince myself that I'm smart. So, yeah, exactly. Yeah, just the candle. Yeah, you have to say that. I mean, that's a lot of selling on that second part of the day. So going into today's close, there was an awful lot of selling momentum. We'll see where this one takes us tomorrow. I'm not a huge fan of the retail real estate ETF, the general rule anyway, as a trading vehicle, but if you are, you probably don't love, maybe you do, maybe you're different than me, you probably are different than me, but you probably still don't know exactly what to think of that candle. So we definitely saw profit taking when we hit resistance. We can say that. At least it happened at resistance. That makes sense. We saw some profit taking, right? Our good friends over in communication services are nothing if not consistent. They continue to do a whole heck of a lot of nothing. We continue to see not much one way or the other over in this sector as of right now. Again, the Facebooks, the Googles, when they're doing nothing, having a hard time. Divergence in some of the gaming stocks. We're still in this range, and for me, I know I'm going to sound boring until I can come up with something better. But for me, broadly speaking, 47, 45, close above either of those or below 47 or below 45 will be a tradable signal as far as I'm concerned. Until then, I'm treating this overall sideways. I'm open, of course, as always, to the individual components within this ETF. As you guys know, I don't really think so many of these things belong in the same sector. But that's just a me thing, and maybe I'll get over it. Maybe I won't. But we still another very sideways day. Not a lot of movement collectively. Netflix just cannot seem to break 360. Facebook just can't seem to get going. Google can't seem to get going. GameStop, gaming stocks just, back and forth, look like good one day, terrible the next. So very undecided sector, in my opinion, right now. So there's where we find ourselves. I mean, for the most part, not a lot has changed. A little more selling in the material sector than honestly, I would have expected on a day like today. Not so much on energy, because energy can really move, kind of at the drop of a dime. But definitely got selling over in the material sector. I think that can make for interesting things next week, potentially. But I have a hard time thinking, at least across the board, tomorrow should be the day I should be buying. That was a lot of bearish activity, and I want to see it slow down, see somebody step in. Maybe there was a reason. I don't know what it was. If maybe that's just the way the day went, right? Something's got to sell. So another kind of day in the market. We're not overly concerned one way or another. So of course the VIX really not doing much to change where it's been. We did see a little bit of a breach of that low from yesterday on the dollar today, but we rallied up very nicely off of those support levels. Coincidentally, gold working to the downside at the same time. I don't think, again, you guys know me, and this really probably is not going to change. I find myself continue to say this is a sideways trend. There is price movement, and I understand that people may want to trade this price action between this range. I'm just not one of them. That is probably not going to change. I don't think, anything's possible, but I don't expect that to change anytime soon. If we are looking at potentially trading it on the shorter term, I don't think this candle is enough for me just yet. We did put in a lower low, but we also put in a lower high, hanging out right below that 50-period moving averages. We are below all of the moving averages. I'm going to need at least a little more upward movement before I could at least understand where potential retracement buyers were coming from myself. I don't think this is the type of thing that you can buy tomorrow. Now, you don't have to agree with me. It's not my place to tell you what to do with your money. But when I look at a chart like this, I'm still working toward the bottom of the range. So I get it. But I'm below some averages. I've not quite decided. I'm seeing a lower high and a lower low. Sure, some nice upward movement. You made me do a trade on this. I probably would say bullish for tomorrow if you made me do something. But these averages are going to concern me within this range. So maybe it can feel a little bit different. I think you need at least one more candlestick to give a little bit of confirmation that this is a retracement. I'm not quite so sold on it. But again, I completely understand that I don't really care. And I don't honestly put a lot of thought into this chart. I put more time with this chart here with you guys than I do on my own, because I think that the right way to look at this is just long-term neutral, or at least midterm neutral until we come out of this range. So I'm not really spending a lot of my personal time thinking about the chart for the dollar index. I just think the easy calls it sideways, and until it's done, just treat it as such. But I know that's just me. I am not a conduit for everybody. So over in metals, we saw that rally off of the intraday on the dollar. Coincidentally, maybe not, right? We did see basically the opposite over in gold here today, taking out that low from yesterday. Pretty bearish candle. I think you have to call it what it is. I'm not bearish on gold, but I think you have to call this candle today a pretty bearish candle. And at least as of the way we look right now, I think you should probably expect to see a little bit more downward price action. We're not really seeing much. If we go into an hourly chart, we had a breakdown. We're kind of consolidating, drifting to the downside. Really no signals, even on a 15-minute time frame. you're not really seeing any signals just yet to think that tomorrow is going to be the day that it turns right around. Mentally speaking, because I will remain bullish, and I think I can't see a bearish argument on gold until we take out 13 and 100 and the 50-day moving average. I wouldn't necessarily be bearish at that point. Probably depend exactly how it looks, and that would only be short term that I would feel bearish on it. But I can't really see a case. Now, I really can't see a case to buy this tomorrow either, other than it's gold, right? And buying gold lately has been basically a pretty big win, no matter how you're doing it. But of course, we can and always strive to do better. Maybe we create a higher low. That would be perfectly fine. I mean, if you think about it, it's not done anything wrong other than pulling back maybe a little bit deeper, right? We're still creating, holding higher highs and higher lows. That has not changed. And if we stay above that 13, then we will not have taken out that previous swing low. By default, we're making higher highs and higher lows. So we've got a lot going for us at 13 in my mind. Big round number. We saw the price action. We don't need to rehash that. Our 50-period moving average is right there. That is where our previous swing low is. So for me, I don't really think, at least as of right now, you can make a bearish case above 13 for gold. And that's at least how I will be treating it. But I am kind of mentally prepared for a little bit more selling on it, at least until we can kind of get somebody to step back in. But I do overall, probably much like most gold traders, I don't think today's, the last 2 days of selling, maybe I would have preferred they didn't happen, but I don't think they're enough to change from being a bull to a bear. But I do think we are seeing a little more willingness to take profits right now. And if you kind of think where we may end up, if you look at silver, a little bit of a different story. We are doing some things that I don't think we should be doing from a bullish point of view, at least. We are getting, we close below the 50-period moving average. Not the biggest thing ever, but I mean, you don't want to see it, if you're bullish, you don't want to see something close below the 50-day moving average, right? It's hard to spin that as a positive. Now, we haven't taken out support yet, haven't even tested support yet at that 1550. I think we want to keep an eye there. If we break that 1550, I think you have to ask yourself, and I don't know that what you do necessarily, but is this a double top, an M pattern, whatever you like to call it? Not yet. Right? We'd have to break support to even have that conversation, but we're knocking on the door of support. On the other side of it, well, this is support. This should hold from a buying point of view. I don't think you can do it on today's candle, but at the price, I get the argument. Right? We see a little, some buy signals playing to silver here. Maybe we are just going sideways. That would make some sense to me. I don't think you can. I could never do that tomorrow. I would never do that tomorrow because I would never buy on a candle that looked like this. But if we, have a small body candle tomorrow going into next week open or doji tomorrow, that could definitely change, no doubt about it. Keep an eye on that swing low. I think you'd have to call that a sell signal, whether you called it a bearish signal or not. That would probably be up to you and your personal rules. But I think a break of this support, you'd have to call it a sell signal. Would it be enough to go bearish? I don't know. I don't know. That'd be a tough call with, as long as gold's above 13, it kind of, I don't think so. But that's just me. And that's just today. So, well, ask me again when and if we do break that support level, maybe I'll have a different opinion. Over in natty gas, continuing to go within this range. Very interesting. We need one more day. And I think we can kind of look at it like we did going into this week, next week. We've developed a range. We've broken. There are some bullish signals. And as we talked before, I mean, these are the early stages. And so I get it. It's not for everybody. But we've held support. We broke resistance. We've closed above our short-term averages. Our 9 is starting to rise to the upside. A break of this resistance. And if it happens tomorrow, well, good for everybody who it happens for. I'm not going to be interested holding over the weekend personally. But a break above this would be another bullish signal. I think you'd have to call it that. I don't know if you could call a break below today's low a bearish signal as well. I think the break to the upside would be a little better of a trading signal with kind of holding this bottom, breaking resistance, holding the averages. But that's just my opinion. This is a pretty interesting battle that we have going into next week, basically sideways, and we've really done some interesting things. Broke out, tested resistance, pulled back and tested support, and we're basically sideways, right? It's natural gas, so 4 days can be a sideways market these days, is all. So I do think we can continue to watch this price point, see what happens if and when we take this thing out. That would be putting in a higher low and a higher high. right? And so potential reversal, I think you have to be at least open to the idea of it within natural gas right now, as long as we are continuing to hold this low. And so should be fun, a fun week next week on natural gas, see how it plays out. But it's been actually fun thinking about natural gas lately, instead of just see you tomorrow, see you tomorrow, see you tomorrow. You guys know how many times I said that, right? Well, I wouldn't see you tomorrow, we'll see you next week. So, and lastly, over in crude, continuing to push ourselves up, not quite making it up into that resistance at about $58, but continuing a little bit of that momentum. Keep an eye on that 58 as a short-term potential level of resistance. It is just a swing level of resistance, but it was for quite some time, at least in short-term trading perspective, kind of topped out there for almost a week. We do have a little price action back here, so keep an eye on 58 from a bullish point of view. That should probably be about the only thing in the way up to $59, at least in my head. $59 is a level of resistance that, I've said before, and I will, say again, if I'm bullish in crude, $59 is a profit taking zone, in my opinion. We've seen, it should be a challenge. Whether it is or isn't, I expect it to be a little bit of a challenge. 58 turned into a little bit of a short-term challenge. My expectations were if we can win that, getting into that resistance level shouldn't be that big of a deal. Beyond that, probably every bit as important. I think we can now say that this low that we set up here this week is our swing low, and we should not go below that from a bullish point of view. So thinking of it from a bearish perspective, if that's where I'm coming at the crude with, I think you could at least make an argument if that falters, we've taken out trend. So right now, I think we should not be going below. That's going to put us right around that $55 marker to boot. That swing low should hold. If that breaks, then I think you can at least be looking at it as a sell signal, if not a bearish signal. I do think it would be a little bit of a sell signal. We'll just have to see where this one goes. Knocking on the door of resistance should be a, wouldn't expect that to be a huge deal, but we've seen, a week-long price action kind of trying to push through that before really giving out here. It was a one-day pullback, but it really gave out that day. So keep an eye on that 58, keep an eye on 55. I think we can call that our short-term level of support, and that we should stay above that from a bullish perspective. Personally, that's how I'm going to be looking at it. So ladies and gentlemen, that is where we find ourselves. Man, for a boring day in the market, we went longer than even usual. So I'm not sure how that happened. But I guess there was some fun things going on, at the same time. You're seeing things move, right? H&R Block down huge today as bad earnings and downgraded by two different places. You're seeing that plenty of things moving. Just broadly, we're still kind of in that nice little drift to the downside. We'll see where we end. Hopefully very similar. I'd love to see one more day like this tomorrow, so we can, go into next week kind of, starting fresh. I don't want to see a huge day one way or the other tomorrow. So I'll be hoping for another slow and boring day. We'll see if I get it. Ladies and gentlemen, that is going to do the market recap for today. But as always, you guys, it is my pleasure. It's great to have you with me. I appreciate everybody's time. Thank you so much for joining me. It's always more fun to do this stuff with friends. If you are new around here, be sure to subscribe to the channel and hit that notification bell, and join us over at Tackle Trading on Twitter as well. We've got the Swing Trading 101 webinar that Coach Matt did last night up on the YouTube channel as well. So if you weren't able to check that out, strongly recommend taking a peek. You probably will enjoy it. Did a fantastic job, as I would expect no less from Matt. So if you hadn't had a chance to check it out, I would definitely try to make some time for that in the days to come. With that, guys, as always, it is helpful and appreciated if you do give us a thumbs up if you're enjoying the market recap, as it does help. Let us know we're on the right track. Let YouTube know that people like what we're doing, and hopefully get the message out a little bit more as well. Thank you guys so much. It's always great to have you with me. Thank you, Marie. Thank you, Mike and Tanner. Always great to see each and every one of you guys. You guys have a fantastic afternoon. Pro members, don't forget we've got the Cash Flow Club going on this evening, and then we will be rocking and rolling with the scouting report starting tomorrow night. So get out of here, guys. Enjoy your Thursday afternoon. I'll see you same time and place here tomorrow. Thanks, everyone.